Okay. Okay, tonight we're going to talk the housing allowance. Housing allowance includes various expenses. You can take if you're renting a house, you can take the monthly rent. If you're buying a house, you can take the mortgage that you're paying and the principal as housing allowance. If you're buying a house, your interest is also deductible on Schedule A if you itemize deductions. With the larger standard deduction, a lot of people aren't itemizing now, but when that changes back in 2026 to what it was prior to 2018, if you deduct your interest deductible on Schedule A, you can take that same interest as something you pay into the housing allowance. Utilities, whether it be electric, gas, water, sewer, trash, cable TV, telephone, firewood, in today's environment, streaming TV, whatever you're doing can be part of the housing allowance. Other, such as pest control, cleaning supplies, maintenance that you do on the house or the yard, the lawn service if you pay for that, all that can be included in housing allowance. You have certain things that you pay generally annually. Your homeowner's insurance, whatever you pay for coverage against fire, theft, liability, all that can be covered under housing allowance. Your real estate taxes, like your homeowner's interest, mortgage interest, these can also be deductible on Schedule A. The state and local taxes on Schedule A is limited to a deduction of $10,000. So you may be limited here in how much you can take, but it is a legitimate deduction as well as a housing allowance item. Insurance on furnishings. If you have a separate insurance, say you have renter's insurance or something that covers your house, your furnishings in the house, that would be deductible as housing allowance. Umbrella liability insurance, if you have such a thing, it would be covered under housing allowance. Homeowners or condo association fees or dues can be deductible. It can be part of the housing allowance. And then we get into some of the other items that are not frequently used. If you buy a new house, the down payment, the real estate commission, the attorney fees, the escrow fees, the points, the origination fees, all those things that are included on your closing statement would be an item included in your housing allowance. Any furniture you buy, any furnishings you buy, any appliances, any plates, utensils, cookware, cups, whatever you buy for the house can be part of the housing allowance. Any carpet, any curtains, any drapes, any linens, any pictures, any wallpaper, any paint, any keys, whatever you buy for the house can be part of the housing allowance. Any repairs you do to the house, any maintenance you do to the house, any improvements you do to the house, any landscaping and fencing, whatever. If you're in an area where you have assessments for streets or sewers or sidewalks, etc., all those can be part of the housing allowance. So, what are the rules about housing allowance? Must have a written agreement prior to any monies being designated. Generally, I ask ministers that I'm doing the payroll for to submit their housing allowance numbers in December to be effective in January for any payroll they get paid the next year. The allowance cannot exceed the reasonable compensation of the minister. Now let's talk about that for a little while. Reasonable compensation. We talked last time about what would be reasonable compensation. We had a court case where PTL, the guy was being compensated millions of dollars a year, and the IRS ruled that his reasonable compensation was somewhere in $100,000 to $170,000 a year. Now, you can put 100% of your reasonable compensation or 100% of your salary as housing allowance. It makes it a little difficult, a little unusual to have the IRS recognize your W-2 if you do that, because your housing allowance goes in box 14. And if you say that I want 100% of my housing allowance, 100% of my compensation is housing allowance, then the only thing on the W-2 that would have a number in it, other than your Social Security and address, etc., the only thing would be box 14, which would be your housing allowance. So my advice would be at least have $1 left in box 1, so the IRS will realize that there is a W-2, that there is something there, and that box 14 and box 1 can add together and make your total compensation. But I would not, it would be rare where I would agree that housing allowance should be 100% of your compensation. Now, some of those rarities, I've had a situation where a preacher was preaching part-time, and in essence, everything he got paid, he spent on housing. So in that case, we justified housing allowance going 100% of his compensation, and just deal with the issues that, you know, the IRS or the Social Security Administration or whatever doesn't realize that your W-2 is legitimate if it's only got something in box 14.
I have a question.
Okay.
With the housing allowance, like you stated just a moment ago, with the pastor using the 100% as housing allowance. Now, is this a house that he purchased himself, or is this something that the church set aside for him?
Good question. It is something that he purchased the house himself.
Okay.
Not something that the church provided housing for him.
Okay.
Now we'll talk a little bit well, I don't see it. We should talk a little bit. If we don't, we'll want to talk about if the church has provided housing. The next point on the slide the deduction cannot exceed fair rental value of the furnished home plus the utilities. So if you look at fair rental values, usually fair rental values are stated at fair rental of an unfurnished home. So you would need to take the rental value of the furnishings as well and add that to it, and then add the utilities to it. And your deduction cannot exceed that. We'll have another slide on that in a minute. Now, that doesn't say that your housing allowance cannot exceed that. The amount of the housing allowance can be adjusted by the mutual agreement of the parties. So you had gone 6 months working somewhere, and then you and your wife decided y'all wanted to buy a house. You need to adjust your housing allowance because of some of the things we talked in the earlier slide about a down payment, a real estate commission, and attorney's fees, escrow points, escrow fees, origination fees, etc. Where you buy the new house, you want those included in your housing allowance number. So you may go to the church where you're working and say, I need to increase my housing allowance. They cannot increase it for things you have already been paid, but for the balance of the year, they could increase it. Now, if you made that decision in November to buy a house and you only had December's compensation to increase the housing allowance, you may not get as much as you need. So the planning should be taken into account here that you need to plan for the housing allowance increase to be enough time to get the dollars you need so you can deduct all those stuff under housing allowance.
So what would be a reasonable time, like a 3-month span, maybe?
Depends. If you're going to buy a new house, you generally don't have real estate commission if you're buying one.
Mm-hmm.
But if you're going to make a down payment that is $40,000, say, and you only make $10,000 a month, you need at least 4 months,
right,
or more, because by the time you get attorney's fees and escrow fees and origination fees and all the other things that add on the cost of a house, you need to make sure there's enough time to cover that so that you can get that, in essence, tax-free.
Okay.
So, you know, you don't want to have a very short time and very short dollars to put in there so that you don't get all of the benefit of the housing allowance.
Gotcha.
And if you're similar thing, if you're buying, say your wife tells you we need a new living room suite or new bedroom suite, a new, or all of it, we need new furniture or we need new carpets. You can change the housing allowance at some time during the year, but you've got to make sure that you've got enough time to amount to enough dollars so that now you don't have to wait till after you've accumulated that in your housing allowance. You could buy the furniture in January and do housing allowance throughout the year to make the furniture cost. You could buy curtains or drapes or carpet early in the year, you don't have to wait for that stuff to be in the housing allowance, as long as it's in the housing allowance by the time you end the year.
Okay, I understand.
Okay. The housing allowance has three numbers that we deal with. The housing allowance amount, which is the amount you and the church agreed to beforehand, or the fair rental value of the house plus the utilities. And if you're renting a house, then you're renting furnishings also, or owning furnishings. So you need the fair rental value of the house, which includes the furnishings, or the actual expenses. Now, I use the word housing allowance somewhat ambiguously here. The real number that we're getting to is whichever one is lowest determines how much housing allowance you claim on your tax return. So if your actual expenses came in at $26,000 and your fair rental value of the house plus furnishings plus the utilities came in at $26,500, and you had gone to the church and you had agreed that your housing allowance would be $24,000, the $24,000 is all you can claim. Now, if your housing allowance or your actual expenses were $26,000, your fair rental value of the house plus the furnishings plus the utilities was $26,500, and you had agreed with the church that your housing allowance would be $30,000, you claim housing allowance of $26,000. If housing actual expenses total $27,000, but fair rental value of house and furnishings and utilities was $26,500, whatever's lowest. So that in that case, number two is the lowest number, and that's what dictates how much you claim on your tax return for housing allowance. Anything that you got paid for housing allowance above the number you claim on your tax return gets added back as an addition on line 7 to your housing, your salary amount. So we've got to look at those three numbers: the housing allowance amount, the fair rental value amount, and the actual expenses, and whichever one of those three is least is the amount you get to claim on the tax return.
Okay, and so you said that if there's leftover, that goes towards the actual pension, well, not pension, but your
Salary.
Yeah, your salary. Okay.
So what I advise clients to do is always make your housing allowance more than what you think it'll be. You know, if you looked at your numbers, your mortgage interest and your mortgage principal, your all the things that happen, that all the things I think this year I'm going to put 30,000 I'm going to spend on housing, then I would put my housing allowance number at 32 or 33 or 35 or 40. I'd never make my housing allowance the smallest number. That way, if fair rental value or actual expenses is going to be smaller than housing allowance and is going to be the determining factor.
Okay.
Just as a reiteration of that, it's better to overestimate your housing cost and the amount of your housing allowance in order to maximize the reduction in taxable income. It is your responsibility as the taxpayer to make the comparison of the housing allowance amount, the fair rental value of the house and the furnishings and the utilities, and actual expenses. And as we said, the least of those, the smallest of those three numbers is the amount you actually use in housing allowance. Before we get into retired ministers, let me talk a little more about what's going on here. If you housing allowance, if you're paying Social Security, Social Security includes housing allowance, gets added back to your salary for Social Security tax purposes. For income tax purposes, what you get for housing is tax-free. But we'll talk about the Deason rule a little bit later. The Deason was a minister that the IRS audited one time, and they said the amount you're getting for your housing allowance is tax-free, income tax-free. So all the expenses that you've spent on your minister work should be allocated between how much was income taxed income to you and how much was tax-free income to you. So the Deason rule, based on the court case, the IRS suing Deason, or Deason suing the IRS, and that's so named because that's the court case that brought this rule about. They have to allocate the expenses in the ministry. If you're buying books, buying subscriptions, buying, doing travel, whatever you're doing in the ministry, because housing allowance is a tax-free thing, you have to take what percentage of your income is tax-free, and you don't get to deduct that percent of your expenses. Now, we'll go into that a little more when we get a Deason rule application, when we talk about all the expenses. But we'll go through an illustration of that. But I want you to be aware, as we talk about housing allowance, the ramifications it has. But it only has a ramification of the actual amount that's on the tax return. So if your actual expense was $30,000, but you set your housing allowance at $40,000, the ramification is only due to the $30,000 that you got tax-free for housing allowance on your tax return, not the $40,000 you claimed in housing allowance, because the other 10 got added back to your income from a minister, and only the housing allowance expense got deducted tax-free.
All right.
Okay?
Yes, sir.
If a person is retired, it's possible for a retired minister to designate a portion of his retirement income as a housing allowance. Generally, the income should be coming from a 403B account a B7 or a B9 retirement account. So just like while you're active as a minister, once you retire, you can still claim housing allowance. Now, you may not have the housing cost because your house may be fully paid for, but your fair rental value and those things, you should still look at that, those three numbers, and come up with which one is valid for you to use as housing allowance for a retiree. We've had some court cases where the spouse of a retired minister or a deceased minister asked to have the housing allowance allowed, and the court said no, that the minister was the person that the housing allowance belonged to, and the retirement income of the minister would be allocated a portion as housing allowance, not of the spouse. So a spouse of a deceased minister is not allowed any housing allowance of retirement income. We talked last couple of weeks ago about the minister's housing allowance court case filed by the Freedom from Religion Foundation. And we saw that in that particular court case is 2020 or 2021 when it's finally decided that the housing allowance is a legitimate, Congress had a legitimate reason for doing it. And you think about some of the things, a minister is not the only situation. Government officials, quite often true that government officials, ambassadors use their house for official functions, government functions. So a minister, they're considered a minister's house to be used for his job. So any other work, and in fact, we're seeing a lot as, for example, companies are giving up spots, their office space, and people are working from home now. So we're seeing more and more of the working body working from home. So it's deemed that housing allowance for a minister is just like housing allowance for a lot of other people. They do it because their job requires that they use their house in their job. And then we had the case where a housing allowance was not allowed for more than one house. So, any more questions on housing allowance?
Not at this time.
Okay. Then I'm going to stop share on that and go to another screen share. Going to be here, I think. No. Didn't want to share my email with you.
Mhm.
Shame on me.
Mhm.
Not the screen I thought it was on. That's okay. Well, let's see if that got it. Okay, do you see something called current issues now?
I do.
Okay. Because on my screen share, it showed me the questions slide. Okay. Current issues. Churches are prohibited from engaging in substantial efforts to influence legislation. There's no definition of substantial. In the court case, the Second District Court, Season Good versus Commissioner, less than 5% was deemed to not be substantial. In Haswell versus US, in the same federal Second District, between 16 and 20% was deemed to be substantial. So you can't engage, a church can't engage in substantial efforts. For example, that's not only to influence that legislation. A lot of religious denominations really get into the religion, the democracy, the aspect, the politics of various things. And they come out for or against particular legislation. If all you're doing is publishing a complete list or fairly complete list of legislation that's currently before Congress or before your state legislature, and you're saying we're against this, we're for this, et cetera, and maybe even give the reasons why you're for or against particular legislation, and just make that available for anyone that wanted to go to your website and see what your feelings were. That would not be, in my opinion, right now, a substantial effort to influence legislation. However, if you were, say, abortion, Roe versus Wade got declared invalid by the Supreme Court last year. If as a church you said Roe versus Wade was bad legislation, and you did substantial efforts to influence that legislation or that court case or whatever it may be, you might be violating this rule, that you would be engaging in substantial efforts to influence legislation. There's acts before Congress right now to not now that Roe versus Wade is overturned, to legislate the holding of Roe versus Wade in legislation. So if you came out against that legislation, you may be engaging in substantial efforts to influence that. So you cannot engage in substantial efforts. Now, as we saw, when a church engages in something like that, they may lose their tax-free status. If you lose your tax-free status, contributions made to you would not be deductible. And that could be a major effect on a church, that contributions are not deductible if they're made to that particular church because they don't have a tax-free status any longer. In addition to losing the ability to deduct contributions, you may be subject to fines or taxation, where we saw last week a 50% excise tax or 200% excise tax because of what the church has done. So you need to be careful that you adhere to not doing substantial efforts to influence legislation. No 501c3 organization can participate in or intervene in, including the publishing or distribution of statements, any political campaign on behalf of any candidate for public office. However, the IRS acknowledges that this is not intended to restrict free expression on political matters by leaders speaking for themselves as individuals. They're prohibited from making partisan comments in official publications or at official functions. So, if you had a preacher who got up and publicly endorsed during his sermon a particular political candidate, he would be in violation of this. If instead the preacher in his capacity as an individual, not in his capacity as a preacher, said, I think I will vote for this candidate for this reason, then that would be legitimate use of a preacher's functions, but he cannot do it as an official function or an official publication. So if you printed in your weekly bulletin, I'm going to support these 5 candidates for this reason, that's an official publication, and as such could get you into hot water. If instead you had a Facebook or a Twitter or I don't have any of these accounts, but you had one of those accounts and you said, I like these 5 candidates for these reasons, for this reason, and I think I'll support them. And if the Twitter account is yours personally and not used to publicize the work you do as a preacher, then it's fine. But it's got some gray areas there where when you got to decide, am I speaking for myself or am I speaking in an official capacity or doing something in an official publication?
That's what I was going to ask you, because if you go, even if you go to Facebook or Instagram, like you said, you're still in the capacity as a preacher. But I guess if you don't put your name saying pastor whatever or reverend whatever, then you should be okay. But you're still walking a thin line.
Yeah.
Yeah.
And the statement of the IRS, however, the IRS acknowledges that it is not intended to restrict free expression on political matters by leaders speaking for themselves as individuals.
Okay.
So if you were going on Facebook or Instagram or whatever and making a statement there, I would also make the statement that I'm doing this as an individual. I'm not doing this as the minister for so-and-so church.
Okay.
And that way, the IRS deems that what you've done is speak for yourself as an individual, not in official capacity of a church.
Understood.
Okay. Any questions on these areas? Because there's a lot of things that you can get sideways in.
Yes, sir. You cleared it up for me.
Okay. All right. Then we will stop. Let me stop sharing this. And end recording.